The US dollar has reigned supreme as the world's reserve currency for nearly a century. Its dominance has been a cornerstone of American economic and geopolitical power, but the tides may be turning. A confluence of factors including the rise of new economic powers, the weaponization of the dollar for geopolitical ends, and the emergence of alternative reserve assets, is challenging the greenback supremacy. For decades, the dollar has served as the primary currency for international trade, investment, and central bank reserves. This exorbitant privilege, as French Finance Minister Valéry Giscard d'Estaing famously called it, has conferred significant advantages on the United States, including lower borrowing costs and the ability to run persistent trade deficits. However, the global landscape is shifting. The rise of emerging markets, particularly China, has eroded America's relative economic might. China's growing economic clout, coupled with its efforts to internationalize its currency, the yuan, has raised questions about the long-term sustainability of dollar dominance. Moreover, the United States' increasing use of sanctions as a tool of foreign policy has alienated some countries and prompted them to seek alternatives to the dollar-based financial system. The imposition of sanctions on Russia following its invasion of Ukraine, for instance, has accelerated the push for de-dollarization in Moscow and elsewhere. De-dollarization refers to the process by which countries reduce their reliance on the US dollar in international transactions. This can take various forms, including promoting the use of other currencies in bilateral trade and investment agreements, shifting reserves away from dollar-denominated assets, such as US Treasury bonds, and into other currencies or gold, and developing alternative payment systems that bypass the SWIFT network, the messaging system that underpins most international dollar transactions. The motivations behind de-dollarization vary. Some countries are driven by economic considerations, such as reducing exchange rate risk or seeking lower transaction costs. Others are motivated by political factors, such as a desire to reduce their vulnerability to US sanctions or to challenge American hegemony. Regardless of the motivation, de-dollarization is a trend that bears watching. A significant shift away from the dollar could have far-reaching consequences for the global economy, including a more fragmented international monetary system, increased currency volatility, and potentially slower global growth. One of the pillars of dollar dominance has been its status as the primary currency for oil trading. Since the 1970s, the vast majority of oil transactions have been conducted in dollars, creating a deep and liquid market for the greenback. This so-called petrodollar system has been mutually beneficial for the United States and Saudi Arabia, the world's largest oil producer. However, recent developments suggest that the petrodollar's grip on the oil market may be loosening. In March 2023, China and Saudi Arabia announced that they would begin settling some oil trades in yuan. This landmark agreement, while limited in scope, represents a significant crack in the petrodollar system. If other oil-producing countries follow suit, it could gradually diminish demand for the dollar, potentially leading to a weaker greenback and higher oil prices for countries that continue to transact in dollars. A shift away from the petrodollar would also have geopolitical implications, potentially reducing American leverage over oil-rich nations. Stay tuned for more. Don't forget to comment, like, share, and subscribe.